Hello traders, it's Thursday, July 21st. It's been a week since I've done my last video. I released the last one before the open last Thursday, so let's start with that pick. That's how I like to start every one of these videos off so that you can go back, take a look at the performance, and know that this system works. So I highlighted ZTS as a short that I liked. There was a caveat to the trade. That caveat was that the stock had to be below the 50-day moving average. So you can see the stock did gap down a little bit, and right in here, it penetrated that 50-day moving average. So there was a chance to get in, and that was a loser. Call a spade, wasn't a big loser, but it was a loser. So I hope to do much better and redeem myself. Have not had many losers in the last 4 months. Market has been all over the board, but I'm seeing some signs that I like. So let's start with the market, take a look at where we are, and then let's find some picks. Today, I'm going to give you a long and a short with some market conditions that we'll be watching for. I'm going to be taking some time off, so I don't know when I'm going to be able to do my next video, so I want to give you a couple of picks that you can look at. So as we go into the market, here are some things that I see on a daily basis that I like. You can see that we have this long downward sloping trend line right here. So let's draw it in. We'll start here. This is a major resistance level. You can see that it comes into play around SPY 400. If we can get through this line, that's going to be very, very bullish. Here's another line that we can draw like this, coming through those resistance points right there. And you can see how the market has been able to penetrate it, and it has been able to get above the 50-day moving average. One of the key price points that we have right now is SPY 391. We've been able to add onto this long green bar, closed on its high. We need to see follow through right away. Boom, boom. That's excellent. If we go back and we take a look at when this video came out, we had this upward sloping trend line. And let's talk a little bit about what went wrong. Gosh, Pete had a loser. What happened? And I didn't go into the ZTS daily chart either, so excuse me. Let's backtrack just a little bit. Let's take a look at that stock. So you can see here that it had broken below the 50-day moving average. Video came out here on this long green candle. So before the open, it did break that point, and that's what we were looking at. We had an upward sloping trend line that had been breached to the downside. We had a failed breakout. We had resistance right here at the 100-day moving average. We had relative weakness. The stock was weak relative to the S&P 500. Once it had this type of breakdown and below the 50-day moving average, any additional market selling would have given us a nice trade to the downside. But the market didn't go down. So now we're going to shift focus. You can see that was our entry and our stop was that 50-day moving average. So we kept it very tight because the market has been choppy. So let's take a look at the market. Let's take a look at those 2 days in particular. There's your upward sloping trend line right here. That was a breach to the downside of that upward sloping trend line. We had these major trend lines still intact. Remember, this trend line that I just drew was still intact. That was going to be providing additional selling pressure. We could not even get up to challenge it. So we had these two gap down days. One of them was last Thursday, and the market bounced. And then it bounced again Friday. We had this sell off and then a nice rebound. Those were really big tells because we had very hot inflation news coming out. We had the CPI, we had the PPI, and those were a drag on the market. That's why we were getting the down gap. But then you could see how the market reversed and closed on its high of the day. Once we had these two gap downs that closed on their high of the day and most of those losses erased, now we start getting some follow through buying. And there we've got the rest of our follow through. And this downward sloping trend line, breach to the upside, 50-day moving average, breach to the upside, follow through. These are all characteristics that we really like in the market. So we're going to take a look at the 5-minute chart, and I'm going to also point out something else because I don't have volume on this particular chart. I want to go into this chart that does have volume. You can see how the volume during this bounce right in here has been very low. That's typical of the summer. It's something that we need to be wary of because it indicates that there's not a very high level of conviction right now. And if you take a look at this drop, you can see here that we had this drop right here, then a tiny bounce, and this drop right in here we had follow through on. Didn't take long, took about 2 weeks, and then instant follow through. Now we have this drop, and you can see how for much more than 2 weeks, a month or so, we've actually been forming a base with a higher low. We're starting to get through some minor resistance levels. This I would consider to be a major resistance level. Still a long ways off from the 100-day and 200-day moving average, and we still have a negative market backdrop. So yes, it's nice to see all of this buying right now. We've got earnings season unfolding. Netflix posted a decent number, but the really big news is going to be coming out next week. Yes, banks have reported. Initially, they sold off a bit. That was last week when we were looking still on the short side. JP Morgan missed their number. Financial sector was weak, but financial stocks have actually rebounded. In particular, those firms that do proprietary trading, Goldman Sachs, Morgan Stanley, they've performed extremely well. So we've got this little bounce that's starting to unfold, and we're getting some traction, albeit on light volume. Another piece of big news came out this morning. The ECB raised rates by 50 basis points. 25 basis points was expected. Uh-oh, that's going to be bad news for the market, right? Not really. Here we are again with the market being able to shoulder bad news. So you've got this initial downward reaction, long green candles on the way down here, but mixed. So that tells you, this green bar in here tells you that this sell-off right here is not very strong. Long green candle, little price compression, long green candles stacked, little price compression. Now we're starting to march higher, and we've taken out the prior day's high. This is pretty dang decent price action, albeit choppy in here. We've got these pauses. We have these nice stacked green candles to fuel the move. And the market has been able to shrug off higher interest rates in Europe. It's a pretty big deal. So why would I want to have a balanced approach right now? Why would I want to show you a long and a short today? Well, because the market is still in a longer term downtrend. We've got to get through the month of August. We don't know how earnings guidance is going to play out. We've got all the mega cap tech stocks announcing next week. That guidance is critically important. We also don't know what the impact of the interest rate hikes is going to be. We've just barely gotten through a couple of really big rate hikes, and now we're looking at a 75 basis point rate hike next Wednesday. Do you think there could be some nervous jitters, especially with a 100 basis point move being talked about? I think that's highly unlikely, by the way. But 75 basis points pretty much baked into the market at this point. Well, we haven't even seen what the prior interest rate hikes have done to economic growth. Asset managers are going to be relatively passive. During the month of August and September, they're going to be gathering critical data points on the economy to make sure that employment is still strong, all the PMIs are still strong. They want to see that activity continue. Once they have confidence that these rate hikes are not going to spoil economic growth, we could see a nice rally this fall, but they are going to wait for that information. August, what happens in the month of August? Everybody goes on vacation. Everybody's taking the last few weeks to take their vacation time before their kids go back to school. Traders take time off. Once we get this gush of information next week, we're going to go into a news vacuum in August. And politicians and Fed officials, they flee the Capitol. So you can hear a pin drop there. There's nothing going on. There's no one minding the shop. They know that the Fed has been tightening. They know that the Fed still plans to tighten in September when they come back in 6 weeks. All the while, the market festers and it stews over another possible rate hike. Any weak economic data that comes out in that time is not going to be well received by the market. So, yes, there's still a chance that the market starts to get into some selling pressure. When we had this bounce right here, nice bullish hammer. Ooh, look at this liftoff. Beautiful breakout through horizontal resistance. Oh, yeah, here we go. This thing could really go. This looks great. Blam! Uh-oh. Time to change my tune. I think I'm going to get more bearish now. Here we go. Oh, this is nice. Double bottom, higher, low, through horizontal resistance, breaking through downward sloping trend lines, blah, 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 blah. All on light volume. All we need is a weak round of economic data, and it will change this picture very, very quickly. 391 SPY, very critical level because that is a horizontal support level. 1, 2, 3, 4, 5 touches, and it's the 50-day moving average. So we are not taking any shorts until that support is violated. Market first, market first. On the long side, I like what I see right now. So the longs, as long as we are above the high today, and that's going to be about 397 roughly on the SPY, you can be long. Use that as your stop. We do not want to go below that 50-day moving average, or you've got to be out of your long positions, and then we have a chance to roll over. So those are the caveats. If we get through SPY 400, that other downward sloping trend line that I drew, that is really significant. That tells me that, hey, earnings are actually quite good. Everybody's excited by what the mega cap tech companies have reported, and we've got a chance for a breakout above 400 to gain a little bit of traction. We also want to see that volume come in. So, what does all this gibberish that I've just spent the last 10 minutes mean? It means that the market is still very dynamic. It's digesting news. The longer term trend is down. We have to respect that. We've got a couple of major resistance levels that the market has to work through. We still have a lot of news that we've got to work through. So I feel that for longer term swing trading, you still want to be in cash. Do what the asset managers are doing. Wait on the sidelines. Wait for clarity. I believe August and September, we're not going to go anywhere fast. I believe that those are going to be months when asset managers are evaluating the economic data points. We do also have a looming issue. You've heard me talk about it. It has me worried on a longer term basis because it deals with credit. I don't like what I see in China, and I have been very vocal about it for almost a year now. We saw their market roll over way before our market last year. They have been in bear market territory for a very, very long time. If they're the economic growth engine for the world and they're coming out of COVID, why would their market have been selling off a year ago? Well, now they are plagued with COVID. But the thing is that we're seeing credit concerns there. Folks, this is the second largest economy in the world, soon to be the number one economy in the world. And they could have credit problems. We're seeing their property developers default on their loans. We're seeing mortgage holders, homeowners who have property that's under construction not paying their mortgages because they don't feel that those projects are going to be completed. And this is even at the risk of degrading their social credit, as China calls it. We also have Chinese people in rural areas trying to access their bank deposits, and they're not able to. And the Chinese government is saying, oh, well, you don't need that money. See, that money is an investment. So you need to keep that money there. Truth of the matter is, there is no money. They don't want a run on the banks. It may be rural for right now, but trust me, these things have a way of spreading very, very quickly. We also have a decline, an outflow of funds investing in Chinese bonds. This is the fifth month in a row when you've seen a sell-off in Chinese bonds. Now, are interest rates spiking? No, they're really not. So I wouldn't be overly concerned, but that flow is telling us that money is leaving China. And you've got all the other warning signs out there right now. Plus, they're plagued with COVID. I don't like what I see in China. And if they do have a problem, they will make our 2008 2009 financial crisis look like a cakewalk. And we don't know the levels of debt that are spread across all the different provinces. So we need to be very, very careful of what's happening in China longer term. And I watch those headlines daily. You also have the Chinese government regulating their tech stocks and their tech companies. So who's going to want to invest in that type of environment? We'll see how things play out. I'm concerned with it longer term. When we had our financial crisis in 2008, 2009, everybody scoffed at it initially. It was like, it's countrywide. So what? It's just, one small lender. It's not going to spread. So let's watch those headlines. Let's keep everything short term. We don't need to worry about longer term investments. I believe that August and September, we're going to have some clarity. The dust is going to settle. We'll be able to watch the price action. When we see asset managers coming in force, stacked green candles on the S&P 500 like this on heavy, heavy volume, we'll know that they're engaged. And we'll know that with confidence, we can come in and we can buy this market for longer term swing trades. Until then, we keep everything in front of us. We keep everything short term. We focus on day trading and we use key support and resistance levels on the S&P 500 to tell us which side we need to be on, and then we find stocks with relative strength and relative weakness. So that's what we're going to be doing over the course of the next few weeks. So let's get to it. I'm going to go into my heavy volume, heavy buying search. This looks for unusual volume, and it's also looking for stocks that are above the prior day's high. In any event, we've got Tesla right on the top of the list. Earnings after the close yesterday, beautiful rally, still has plenty of room to get to the 100-day moving average. Downward sloping trend line, breach to the upside. That's good. Horizontal resistance level, breached to the upside. That's also good. Upward sloping trend line, and you can see how even when tech stocks were making a new low for the year, Tesla was not. We had a higher low. This is a nice little upward sloping trend line in here. I like Tesla. I think Tesla is going to perform well. Look at that chart. So right now we are 3 hours into trading. On Thursday, I like Tesla. This stock looks like it's going to keep on going. I love this breakout. I am expecting overnight follow through. I also like what I see in the market right now. So I think Tesla works good for today. You can see how the market's been able to get through the prior day's high. It's been able to shrug off an ECB rate hike. Yeah, I think buyers are engaged right now. Got mega cap tech earnings next week. Everybody's all excited about Apple and Facebook and Google and Microsoft. So yeah, I think the bid is going to remain fairly strong, at least for today and tomorrow. And that's all you should be focusing on, is trying to catch these moves for a couple of days. Keep it in front of you. Keep it very short term. I like Tesla. I think we're going to see follow through tomorrow. So even if you don't pick the optimal entry point today, I still think you're going to get a nice move overnight. So I watched the video Thursday night. I came in Friday morning and Pete told me he liked Tesla. It's up $50. I wonder if I should buy it. No. If you watch a video today, Thursday, and you've got a nice entry point, fine, you can hold overnight. But I don't want to be long Tesla if it's already bumping up against the 50-day moving average. You've got to use these major resistance levels and plan accordingly. So Tesla is your long pick of the day. I believe it is going to be trading higher Thursday And I believe you're going to see follow through buying on Friday, and then we will see what the market does and we'll see what the stock does at the 100-day moving average. But this is a very strong pattern. There's some other really nice stocks in here. Seeing a lot of stocks that have been badly beaten down, just like Netflix, really gaining a good bid here. Nice, steady, consistent price movement on the upside, much more so than shorts. On the short side, the market's been moving higher, so these shorts have been fighting that headwind, and you're not getting the same nice, steady price action on the downside. But Netflix looks pretty good. LVS, they posted earnings after the close, downward sloping trend line, breached the 100-day before the earnings. Now it's through the 200-day, testing this horizontal resistance level, not able to quite get through it. It looks okay. SE is one that I highlighted in the chat room. It's been deeply oversold. You can see how it's been finding support here. It is strong relative to the market, getting through this horizontal resistance, has room to the 100-day. So that looks nice. These are the types of patterns that we're looking for right now. Let's shift gears. It's been a long video. Let's get into heavy selling and see what we've got there. Yes, there are stocks that are down. I highlighted IBM in the chat room yesterday. Upward sloping trend line, touch, 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 touch. Lots of touches in here. That's a very solid trend line. Stock breached the 200-day moving average post earnings. Look at that follow through. Even with the market moving higher, stock has been selling off. Yes, IBM is weak, but I would not be chasing it here. I'd rather be picking it up right here like a couple of days ago, knowing that there's likely follow through. So we're going to continue to maybe take a look at a few of these. If I'm not seeing a technical breakdown, I am flipping through these charts. So this stock is not breaking technical support here. There's nothing for me here to suggest a short. I've got resistance, I've got support, and lots of chop in between. No, thank you. UAL. No, thank you. Upward sloping trend line here. That's your support level. Now, yes, it's breaking down a little bit earnings after the close, but nothing that I want to sink my teeth into. TMUS, nothing there. Nothing there. IBM we looked at. I like that one for a short. These are the things that you need to be looking at. CVS coming up on a horizontal, or excuse me, a upward sloping trend line here. Yeah, that could be a decent little breach right in there, but it's bouncing today. PG. Ah, PG. I like this one. I like this short. Earnings next week, 729. You can see horizontal breakdown right in here. Compression, 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 riding that 50-day moving average. Look at that relative weakness. Decent volume. So these sellers are bona fide. They're getting out. Horizontal support breached to the downside when the market is strong. Yeah, I like this short. Let's take a look at the 5-minute chart. This will be our tell. We'll also go into that 5-minute chart on the S&P. It'll be poking out the right side. You can see that follow through in here, really shaping up nicely. Look at this stock, gap down. Look at the rally that we've had in the market just recently. So the S&P 500 has basically rallied 40 S&P points. What has the stock done? Nothing. It's being dragged higher by its hair. Orange line below zero. Relative weakness. Institutions. Whap, 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 whap. Every little bounce, they're trying to just unload shares. They want to get out of this stock. That's the tell. That's how we know what the smart money is doing. And that's why PG is going to be a good short. Wait for it. If the SPY is below 391. If the SPY is not below 391, we're not considering any shorts. So that is the main takeaway that you need to have is that we're waiting for that market weakness before we consider some of these shorts. Upward sloping trend line, lots of touches in there, nice defined, comes up in here, blam, earnings before the open, through the 100-day, through the 200-day. This is AT&T. It has been able to recover based on a strong market, but this is a pretty dang big breakdown. Choppy stock, so not my favorite type. I'd like to see, instead of this gappy type of price action with long tails, I'd like to see nice orderly price action, but a decent breakdown. There's another telecom, upward sloping trend line, broken there, follow through. Yes, choppy, choppy, choppy. We can do better. We can find better than that. No interest there. Upward sloping trend line comes in here. No interest there. Still strong relative to the market. Ooh, hey, downward sloping trend line below the 200-day moving average. Breaking horizontal support. By the way, some of these supermarkets, they also have been a flight to safety. They've been what's called a defensive play because consumers are always going to be buying groceries. But now that the market is strong, you're getting a rotation out of some of these safer stocks and into tech names. That could be part of the reason for the decline. Part of the reason is, I'm sure, inflation related. They're having to hike their prices. Consumers are buying less goods because of the expense. This is a nice breakdown. Take a look at KR on the downside. Yeah, that is a nice looking chart. Market up, 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 whap, 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 whap. Very, very weak. Yes, Kroger's a good short. So, which one am I going to pick? I've got a couple of picks right now. Am I going to pick Kroger or am I going to pick PG? I think both of them could work well. Here's another one. So when you see a defined trend line like this, you want to make sure that you set your alerts. GTC, click that. I'm going to click that right there. Going to click that right there. When this is breached, I want to know about it. It will also be below the major moving averages. You can see relative weakness, BKE. I think that could work out as a good short, but again, choppy. Let's compare these two charts. I have to demonstrate what I'm talking about. Look at this. Look at these long tails in here and this gap and this garbage. Can I come in here and tell what this stock is going to do from one day to the next? No. That is some nasty stuff. You see this, you avoid it. You run from it. There's no follow through. This, yes, I can make sense of this. Down, 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 down. Once it gets a trend going, it tends to continue. Get a nice breakout here. Yes, higher lows. Go, 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 go. This is consistency. That's what we're looking for. That type of price action. Once a trend starts, it continues. I think KR is going to be the short that we go with. I like that. It's broken major support. The 200-day moving average is still intact. If the SPY is below 391, I like shorting KR. Let's take one more look at PG. So I want to make sure PG's actually got a lot more downside room. So I'm going to change my pick of the day to PG. So the caveat for PG, we're going to use the support level right here and this close. If PG is below 141.50 and the SPY is below 391, I like shorting PG. If the market is above, actually I didn't have a contingency on the market for Tesla, and there's a bullish explosion alert. Let's take a look at that. That's interesting. This is a daily chart, downward sloping trend line, breach the upside above the 100-day moving average. These explosion alerts come to us, news related. Interesting. I'll be taking a look at that a little bit later. Tesla. Tesla, look at that strength. You can buy Tesla today, Thursday, and you can hold some of it overnight. If you get really nice gains out of Tesla today, take some gains, keep some overnight, exit on Friday, reload next week. That's the process. Thanks so much for watching this long video, everyone. I'm having a really hard time finding time to do videos right now, and I'm trying to take some time off this summer. Plus, the market volume has been very light. Going to have a lot of news coming out next week, so that'll be a gush of news. And then we go into a news vacuum in August. So enjoy the trading right now for the next couple of weeks because things are going to really dry up after that. I've given you some nice stocks and some important levels to watch on the S&P 500. Please leave your comments. Trade well. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.